Let's talk portfolio diversification, risk management, lower cost, and tax benefits. ETFs. One of the best all-time high-quality ETF is the Top 40 ETF. This ETF tracks the performance of the 40 largest companies on the JSE, such as Shoprite, Capitec, Sasol, Vodacom, and others. Hi guys, how's it going? I am Nanatom Chaki, and welcome back to my YouTube channel. In today's video, I'll be picking a Top 40 ETF. There are different providers for this ETF, so I have to pick one, and I have to do so carefully. As far as I know, there are 4 top 40 ETFs that are trading on the JSE. So if you are looking to pick one for yourself or to pick any other ETF, please keep watching for factors to consider when picking an ETF. And don't forget to subscribe. Click the subscribe button below to become part of this family. As I've mentioned in my intro, that this ETF tracked the performance of 40 largest companies listed on the JSE. So when you buy this ETF, you are actually buying all those companies at once. This is how diversified this ETF is. So if you are looking to manage risk, you can buy this ETF instead of buying those companies individually, as buying shares in individual companies can be risky at times. But with an ETF like this one, the performance of one company balances out the performance of other companies. For example, if 2 companies are performing poorly and there are 38 others that are performing well, the performance of those 38 others balances out the performance of the entire ETF. Then your ETF will continue to provide good returns. Unlike when you own the companies individually, bad performance of one company can cause significant losses on your entire portfolio. So ETFs are the most powerful way to build wealth and are safe. So if you are like me, you don't have the capacity to handle risk and don't even have the time to be checking how a stock is performing, and when you own individual shares, you tend to do that. So you can consider investing in ETFs because they are safe. You don't need to check them all the time. You just know that over time they're going to provide good returns. Now let's start comparing these ETFs to see which one is better. And as I've said, there are different providers for these ETFs, so you only have to pick one. The good thing is you can do so on the EASE Equities app. So I'm going to jump into my EASE Equities app so that I can start comparing. And the great thing is that most ETFs, including the top 40 ETFs, are on the tax-free savings account. When you invest in this account, you pay no taxes, no dividends tax. If now you receive dividends of 100 Rand, that money is yours. SARS is not going to touch it, you're not going to pay tax on it. So now I'm onto my EASE Equities account to start comparing. So I've went to my tax-free savings account and then I clicked on invest, and then on the search box I wrote top 40, and the first ranked top 40 ETF popped. So I clicked on it and then I went to EASE ETF, and then it took me to the screen, and then from now on I'm going to click on compare ETFs, and then as you can see it's giving me options to add funds. So already, because I have clicked the FNB Top 40 ETF, I'm going to click on the next add fund, and then I'm going to scroll down to see which ETFs are top 40 ETFs. As I've said that there are 4 ETFs, but I can only compare 3 because EASE Equities only gives me options to compare 3. So there's One Invest, there's Cetrix, and there's Signia, and then the other one is the FNB Top 40, right? So for now I have excluded it. So the first thing that I'm going to look at is the expense ratio, right? Because it's very much important for you to know how much you are charged to own that ETF. So now when I look here, the expense ratio for One Invest is 0.29%, and then for Cetrix is 0.1%, and then for Signia is 0.22%. So now I am going to exclude One Invest because of its high expense ratio. I cannot pick an ETF with a high expense ratio because every single year I'll be paying more of this. I'll be paying more for these expenses, and this money is going to come from my investment, so it's not ideal for me. So as I've said, that the expense ratio determines how much you're going to pay every single year. It measures a percentage of your investment in the fund. So if you had invested $1 million in Cetrix, you'll only pay 100,000 for these expenses. So you definitely pay more if you had put your money into one invest as compared to Citrix. You would pay 290,000 and the expense ratio reduces the value of your investment. This is the money that you're going to pay every single year and it's going to come from the value of your investment. It does not come from your bank account directly, but from your investments. So if you now had R1,000,000 worth of investment in one invest top 40, at the end of the year it will be reduced to 900,000, not even 900,000, but 710,000 because of the high expense ratio it has. So you need to be mindful of an ETF with a high expense ratio. This is why I'm not considering to pick one invest ETF. And sometimes you might be tempted to go for an ETF that is cheap. Maybe it's trading at 10 rands, but find that it has a high expense ratio. Cheap share prices are attractive, yes, and you might think it's a good investment and go for it, but find yourself paying crazy amounts of money for these expenses. So be very mindful of the total expense ratio. So now I have taken out one invest and included the FNB top 40. So now I'm left with 3 that I have to pick from. The next thing that I'm going to consider is the performance of the ETF. Performance is very much important, guys. This is where your gains are. These ETFs will probably have the same performance percentage as they are tracking the same companies. However, if we look at the FNB ETF, it is not performing as great as the others. I'd be lying if I knew why, but if you can look at the performance for the past year, it's 14%, while it's 18 and 19% for the others. And honestly, this can be seen as a red flag, because why is it not performing like the way the others are performing? And the goal is to get the highest returns on your investment, and the RMB wouldn't have given you that if you chose it over the others last year. This is evidence, it's not me, numbers don't lie. You wouldn't make a loss, but you'll still not be making great returns as those that would have chosen Citrix and Signia. But when looking at other periods, it matches the performance of other ETF. The next thing to look at is the fund size. What I can say about the fund size is that the bigger the better. ETFs with large fund sizes have the lowest cost. We can see with Citrix, it has the largest fund size as compared to the others, and at the same time has the lowest expense ratio as compared to the others. We can see that for FNB it's 0.13%, for Citrix is 0.1%, for Signia is 0.22%. This proves what I just said about the fund size and the expense ratio. So I bet by now you can tell I'm going to go with the Citrix ETF, mainly because of the lowest expense ratio it has. So the good thing about these ETFs is that all of them pay dividends, and this gets me excited because I love dividends. I invest for dividends. So dividends, actually, for those who don't know, is the money you get paid for owning shares in a stock, but not all stocks pay dividends. But I believe most of top 40 companies, if not all, they pay dividends. So if you buy the top 40 ETF, you will receive dividends through the ETF, not from every single company that is in the ETF. So I'm picking the Citrix ETF over the others, and this ETF pays dividends quarterly. The last dividends were paid recently on the 24th of April, but I missed out on that, but I'll catch the next one, which will probably be around June. So now, since you guys know that I don't have a big account, I have a very small account, so I will be investing 100 Rand into this ETF every single month. So what I love about ETFs is that you don't have to stress about them. You don't have to keep checking on them. They are actively managed by their providers. All you have to do is just lay back, keep on investing, get your investments to grow, and get those dividends. It's the end of the video. Thank you so much for watching. Please subscribe and turn on your notification bells so you get notified whenever I drop a video. Once again, thank you so much for watching. I will see you again soon. Bye.